Good morning, early February. Trying to get my computer set up so I can do this. So, what I wanted to talk about this morning, this is Ken Krager. Ken Krager from Black Swan Financial Advisors. Again, let me get the disclaimer out of the way. Everything in this video, everything on my website, everything on my YouTube channel is for informational and educational purposes only. In my part one, you guys already saw this particular chart. And so we're going to throw this up here. We're just going to do a really brief, quick, should I do a Roth conversion this year? And for most people, it's probably a fairly simple question and answer. If your tax situation is more complex, and if you want to, or whatever, I would suggest that you talk to your accountant anyway. But we're going to use this 2018 numbers here. So we're going to assume that you're in this 24% tax bracket right now. We'll talk in another video about what marginal tax brackets means, but let's just keep it simple and let's just say that you're in this 24% tax bracket. And so as a married couple filing jointly, you're going to stay in this tax bracket until you hit $315,000 of taxable income. So, I mean, just look at that, right? If you were before the tax cuts and actually within a few years, you're probably going to be right back over here, which means you would be smack dab in the 28% tax bracket instead of the 24% tax bracket. And the band would be way lower. You could only go up to 233. So if you had $300,000 of a taxable income, you would be in this 33% tax bracket. I mean, that's 9%. 9%, that's huge, right? So anyway, that's why you really might want to consider doing this year, next couple of years as things go out. So what I'm going to do is we'll go ahead and just do some simple numbers, okay? So, So here we go. This is a little whiteboard thing. So let's just assume that you like $180,000, and you have some money either in a 401k that's in a tax deferred 401k or an IRA that's a tax deferred IRA. And again, you saw the band, 165,000, right? So a couple of things that you have to kind of understand a little bit, and we'll go into the details of these particular topics at another time. But how old are you when you're going to do this conversion? Is it IRA money or 401k money? And actually, in a 401k, you can put in the tax deferred 401k, you can put pre-tax, which means all that money in the 401k is tax deferred. And when you max that out, you can actually choose to put money that you've paid taxes on and put more in your 401k. So those are post-tax dollars. That basically means that the contributions that you make will not be taxable in the future because you've already paid tax on them, but the earnings would be. And there's a thing called a mega Roth conversion, and it has to do with these post-tax dollars, and we'll get into that in another video because it's really powerful. In the Secure Act 2.0 that was just passed in December made that even better. So anyway, let's just do some simple math. I have 180K of taxable income, and I want to know, should I go ahead and convert some of my money? Well, I'm in this 24% tax bracket, okay? And I can go up to 350K, and pay 24% on the difference. So basically, if I decide what I can do this year, and we looked at this chart, I mean, chances are you're going to save quite a bit of money in the future. Maybe as much as 10% and plus 25% on all the earnings that money would make. So remember, the advantage that we're really looking for is to get our money in a tax-free bucket. And my next videos will actually show the implications of that on your taxes and how powerful that can be. So just this simple math, I'm going to do my 180K. How much money do I want to convert? It's super easy if you're 59 and a half or older, because you don't have to pay a penalty. If you're younger than 59 and a half, you have to pay a 10% penalty, or there's some things that you might be able to do. So, please get with me and we can talk about that. But you're going to have to pay the tax on this money. So say you decide I'm going to take $135,000 out of an IRA or a 401k and I'm going to convert it. So you're going to have to pay the 24% tax. Okay, so that's about, what is that? About 30,000. So probably the biggest concern or thing that you need to think about is, yeah, I want to pay that tax because it's going to be lower now than in the future. And the band, is really big, up to 315,000. But I have to have the money available to pay the tax. Okay. If I don't have the money available outside, and I have to, say I have to take 160,000 out because I got to take some of the money to pay the taxes out of that. You just have to realize, that you've got to pay this tax. So you're going to pay 24% tax. And if you're over 59 and a half, that might be okay. Pay the tax now instead of later at a higher rate. If you're younger than 59 and a half, if you take 160 out, for example, and you take 25 of that to pay the tax, that 25 will be considered a distribution and not a conversion. And you will pay the tax and the penalty. Okay? So say you're older than 59 and a half, you don't have an extra 30,000 sitting around. So you need to take a big enough, so basically you're going to take a distribution of the tax money. You'll pay tax on it. If you're over 59 and a half, you won't pay any penalty. So you'll pay the 24% on essentially the 135 that's going to end up in your Roth. And then if you had to take some money for taxes out, you'll pay 24% on that money as well. But personally, I think it's a powerful thing, because now you end up with 135,000 over in a tax-free account. And from now on, that 135,000 will grow tax-free. So, simple rule of 72 says if I get a 10% return on that $135,000 in 7.5 years, it'll be worth $270,000 tax-free. So that will really save you a huge amount in the future. So anyway, I would strongly encourage you to think about this, whether you should do a Roth conversion this year. And my part 3, we're going to actually start kind of from the beginning, and we'll talk about 401ks and IRAs and pre-tax dollars and post-tax dollars and conversion strategies and everything. And there'll probably be another 3 or 4 more videos. And actually there's a course that you can take, or you can just contact me directly and we can work together and figure out what's best for you, and based on your income levels and your tax situation and everything, and how you might benefit from this and minimize your taxes. Again, wouldn't you say that if I can save you 10% on your money, that I made you 10%, right? There's often more money in not losing money than in making money. So thanks again. I hope you found this valuable. Again, educational and informational purposes only. Have a great day, and I'll see you later. Thanks.